Alrighty guys, you saw the title of this video. We're going to keep it quick, simple, sweet, to the point, and it's kind of an off-the-cuff video, but I've been thinking about it for these past couple of days, and I figured, why not? Let's do it now. Let's make the video now. It's about 9:30 a.m. Markets just open. Cheers, guys. Let's take a look at these markets and talk a little bit about kind of what's been on my mind, right? So if you all find value, hit the like button, subscribe, get your free money from Moomoo, up to 5 free shares of stock, each up to $3,500. All you guys got to do is use my link down below or go to stocksurfest.com/Moomoo, deposit at least $100, and boom, you get your money. And with that being said, let's talk a little bit, because again, this has been on my mind, and everybody needs to hear this. And it's pretty basic. It's simple. It's nothing like, it's nothing crazy, rocket science or anything like that. But before we talk about that, give me a second. The NASDAQ is up 2.8% right now, so we are getting that snapback rally that I talked about, ad nauseum yesterday, the day before that, the day before that, right? So we're finally starting to see some sort of a snapback rally, and I did buy some VOO yesterday, as a shorter-term trade. All you guys in my Patreon know that. We have the Russell up 1.8, NASDAQ 2.8, S&P up 1.9, the Dow is up 1.5, the VIX is down 7%. We even have gold and silver up. Gold's up 0.2% now, silver's up 0.65%. So what everybody needs to hear, guys, is this: point blank, period, simple. When you feel like it's getting so unbearable, and by it I mean the markets, right? When you feel like the markets are getting to a point where you can't bear the pain anymore, you've seen your portfolio go from, let's say hypothetically, $100,000 down to maybe 65,000. Well, if it depends on what stocks you own. If you own, quality blue chip stocks, some growth, maybe you own QQQ or SPY, you might be down maybe 20-25%, something like that. But if you own some hype stocks, risky meme stocks, you might be down 60-80%, and that's a little bit different. So if we're looking at this, if let's say, for example, or just for this video, right, let's just say you have a group of solid companies. We're not talking about speculative companies in this video, but let's say solid, profitable companies that have been around, ETFs, index funds, that kind of stuff, right? And if you're looking at your portfolio, right, with these types of investments, and you can't bear the pain anymore, it's come to a point where it's you're losing hand over fist. That is usually when, I don't want to say it's the bottom, or I'm trying to call out a bottom, but that is usually, when we're getting close to a bottom, right? And again, I'm not calling bottoms out. I'm not saying we're at the bottom now. Who the heck knows? We could go down another 5-10%, definitely possible. But once you start to feel, all I'm trying to say is, once you're at that point where you can't even stomach looking at your portfolio anymore, you look at your stocks and you're like, oh, I don't even want to look at them. That is, honestly, I'm not a financial advisor, but that is when you should be adding, to be honest, right? You gotta, it's funny, the stock market, you gotta kind of use reverse psychology in a way. You have to go against the grain, or against what, the narrative is, or the sentiment, because right now the sentiment is fear. I mean, for Pete's sake, guys, look at the VIX. Let me pop the VIX up. You know this. The VIX is in the mid-30s still, low mid-30s, and that's really been the peak these past couple of months. We've hit that 5-6 times, and now we just hit 35 yesterday, and now we're at 32. Again, I'm not calling tops, or I'm not calling a top on the VIX. I'm not calling bottoms in the markets. I'm just saying, when we're down, look at Triple Q. Triple Q is down about, right, 30% from top to bottom. It's now down because we're seeing a bit of a rally. It's now down about 26%, but overall it's down 28-30% from all-time highs. VOO, and that's deep in a bear market. Now, I'm not heavily in a bear market, but it's past 20%, right? And we have VOO, the S&P 500. It got down about 18% as of the low from yesterday, so almost in a bear market. And I said this, I think 2-3 weeks ago. Did I not say this, that I thought SPY was going to get to a bear market? At that point, when I was saying that, it was down 13%. Now, like I said, it went down 18-19% as of yesterday. I mean, I said that, and I'm saying it now, that we could go lower, but just realize, when you feel that feeling in your stomach, you're like, I'm not looking at these markets anymore. That's usually when you should not sell out, panic sell, maybe buy. I'm not telling you what to do. And from there, just hold on and just be on the roller coaster ride, in other words, because that is what, that in reality, that is, that's the name of the game. You got to just be in it for the long term. And if you're jumping ship, that's usually when you lose, right, guys? So that's pretty much it. We're about 5 minutes in. No need to drag this video on and on and on. Actually, we could drag it to 8 minutes. Why not? Get a mid-roll ad in here. Let's be honest, and maybe we can talk about Peloton's earnings, because I actually looked at those. Why not? I'll mention Peloton's earnings very quickly, because I saw them and they're abysmal, and I think we could laugh here together on camera, guys. Well, if you own Peloton, I do apologize. But, yeah, let's break down kind of what is going on right now. So Peloton's down 17%. They ended up, it's just abysmal, guys. They ended up losing they lost $2.27 for the quarter. And last year in the same quarter, they only lost 3 cents, right? So the losses are widening heavily. And they see Q4 adjusted EBITDA loss of 120 to 115 million, roughly. Sales of around $2.98 billion for Q4. Or no, that's for full year, right? Yeah, that's for full year. Right? Yeah. That's got to be full year. 2.98 billion versus the 3.73. So it's way under. That's all you got to know. It's way under the estimate, which is horrible. And if we look here, their gross profits down 59% to 19.1% of revenue. Their operating costs rose 101%, guys. Oh my goodness. And now they see Q4 revenue of 675 to 700 million versus the 820 million estimate. That's under the estimate. So they are just getting bludgeoned, guys. Time and time again, quarter after quarter recently, it seems like. And not to toot my own horn, but did I not say this over a year ago? And it came into fruition, guys. And I'm not trying to say I'm a freaking rocket scientist for calling this out, because a lot of people were saying it, but a lot of people, believe it or not, they were under a trance when it comes to Peloton. They really thought this company was going to change the world. I mean, at the end of the day, guys, it's a $4,000 bike. People were locked in their homes, and now the world's open. People are going to gyms again. Voila. Crazy, right? I mean, geez, So I guess that's it. We'll wrap it up there. If you all enjoyed the video, hit the like button, drop me a comment, and don't forget, if you want to get your free money from Moomoo, it's literally free money. Just use my link down below, or go to StatSurfS.com/Moomoo. All you guys got to do is use that link, deposit at least $100, and you get up to 5 stocks each, up to $3,500, and you have a chance at a free share of Twitter. And feel free to join my Patreon as well if you want. That's linked down below, or go to StatSurfS.com/Patreon. Oh, look at that. We just got to 8 minutes. I'll catch you guys in the next video. Thanks for watching. Peace out.